Hello, everyone. I hope you guys had a wonderful week of trading and making some good money. My name is Mickey, and then I'm going to be doing the weekly recap video right now. And at the moment, we had a nice little down day on the S&P 500 today, and actually the Qs were down even more today on Friday. We can take a look at the weekly candles very quickly. So the SPY ended with a nice little green candle right here, but a significant wick from that head and shoulders pattern on the daily time frame. We did get a daily close above here, which invalidated the head and shoulders. But to be honest, everyone and their mother has seen this pattern, so I'm not too surprised that big money moved it all the way back up, stopped everyone out, made everyone panic, and then everyone closed their shorts, got into longs, and then they pulled it a little bit. They pulled it back down. And now we have a volume with 95 million shares, which is actually pretty decent volume for another sell-off day here. I am still expecting downside in the market. I think we may have potentially put in a B wave top for the bears here. So again, this is the bearish scenario where we have put in a B wave top back in July, and the market is going to start moving lower. And eventually, I think we are going to roll over in a pretty dramatic fashion, and we're going to start to take out the October lows of 2022. Although this is not the most popular opinion, because I do see a lot of people looking at this bullish pattern where this is a wave one, at two, three, at two, down, three, and then we're currently bottomed out in a wave four, and we're going to extend in a wave five. Although this is possible, I see this as the least likely scenario. We can take a look at the wave edge here. Sorry, market cipher, and we'll take a look at wave edge quickly. But in the S&P 500, if we take a look at the weekly candle, yes, we had a bit of a pause week this week, but overall, the trend we do believe is going to be down. We have lost a significant amount of momentum to the upside. We have drained a significant amount of liquidity from the market. So if we take a look at right here is the Fed's balance sheet. The Fed is still, again, putting pressure on the market, selling bonds, and their balance sheet is shrinking, which is causing yields to go higher, which is putting additional pressure on the market. Everyone, I can't wrap my head around the fact that they think that rates are going to go lower. Rates can go lower, but if they do, it's because we're going to have a huge market crash, and then everyone's going to pile into bonds, which could very well cause TLT, TMF to spike up significantly. That would be your catalyst, in my opinion, for yields to go up. And I do follow actually Amor Fadi on Twitter, and he's been putting a lot of posts about the TLT or EDV, which is also another way to get exposure to the bonds. And essentially, it's it's in a bottoming process, right? We actually have bullish divergence on the weekly time frame on the TLT and EDV, but the Nasdaq is just completely in the stratosphere right now, and something pretty significant happened in the markets today too. But we'll get to that in just a bit. But covering a little bit more here, we'll take a look at some more indexes. So again, like I said, you have a big slowdown momentum on the weekly. The monthly pattern is putting in it could be putting in a red dot here on the monthly time frame with a 17. Sorry, not a 17. That's a day. It's a 16 in the -5. We have 17 days left in the month. So overall, we're pretty much almost halfway through the month here because it's the 13th of October today. After that, next week we do have earnings for Tesla and Netflix. Those are some pretty big companies. And then we're going to see if the Qs can hold their ground here. If not, they're going to start to roll over. You're also going to print a red dot here. And then looking at the index, in my opinion, that's most in danger right now is the IWM. And again, I've been talking about the IWM for quite a bit of time. Looking at the IWM, once we broke this upsloping trend line, that was a pretty big warning sign. And then you start to take out pretty significant supports quite quickly. It finally found some legs here, getting a bounce off the 169 level. We bounced up to 176. We reached some resistance at the 2 to 20-day moving average, and then we couldn't even get over that, and we started to roll over pretty dramatically yesterday and today as well on Friday. So now we actually have a lower close as well. We closed at 170.27. I do expect that if we start to take out the 169 level on the IWM, we can go significantly lower. We're going to probably tag the 162 level, find some support, some short-term support there. But if this level starts to give 169 and 162, you could very well have a waterfall sell-off in the IWM small caps because interest rates could be rising, and that could be putting a little bit of a panic on the small caps, as they are probably the most exposure, most risk to the interest rates. And if this does happen, and you think that the S&P 500, the SPY, is still going to remain at this level in the stratosphere, right? Same thing for the Nasdaq. If you think that these indexes are going to remain up here with the IWM collapsing, then you're just delusional because you're most likely going to keep going down, and then you're gonna, you'll find some support eventually, but it's gonna be a dramatic sell-off because they're so overextended, they're so detached from reality. All of these stocks this index is only held up by 7 stocks. If you take a look at these 7 stocks, it's essentially just Apple, Amazon, Microsoft, Google, which is, by the way, probably one of the strongest stocks out of the 7 names here, and Meta, which is also another strong stock, but it had a pretty good sell-off today. And then you have Tesla, and then you have Nvidia. So again, Nvidia, I believe, just put in its B-wave top here, and I think it's going to start to come back down. And I do believe you're probably going to start to come back down to this gap fill area, and you're going to take out this this pivot, and you're going to put in a bit of a head and shoulders pattern as well. And when that does happen, when Nvidia is probably, in my opinion, the last one to go, when that does go, I think you're going to have a pretty big panic in the market, and then that's when the Nasdaq is really going to start to, the rubber's going to hit the floor, and you're going to see the shorts start to play out. But again, that's just my opinion. But yeah, overall, looking at the monthly, it's looking extremely bad. You have this red diamond on the monthly time frame with 22 and a -5 on the dual band strength index. The weekly time frame, you're actually cutting into red money flow on the weekly time frame. It doesn't look like it's about to bottom out either. And no bottom yet, in my opinion. And then looking at the daily time frame, you have such big red money flow that it just keeps increasing here. So again, I don't see much support for the IWM. I don't think it's going to hold for much longer. And then you have a 16 and -5 on the daily. So again, this can go lower, believe it or not. And I do have another target for the IWM in the short term. Is basically going to be the head and shoulders pattern, or sorry, not the head and shoulders pattern. It's going to be I think it's a 1-to-1 move, 1-to-1 extension. I don't know if I've drawn it out somewhere here. Basically, essentially this. I think it is a head and shoulders pattern, if I'm not mistaken. But overall, it's something like right around here. I'll just get rid of a few things here. Let me just adjust it, change the settings so it doesn't extend to the right. There we go. So I do believe it's something like this, and you could go down to about 165. But I think once you're at 165, you might as well go down to 162. Anyways, I'll move on here. I'll talk about a few other things. So it's not all bearish. There are some opportunities in these markets. So again, natural gas. I think if you guys have been following for quite a bit of time, I've been very bullish on natural gas. It's had like a dramatic sell-off. It's at 40-year lows. Monthly pattern was very good. You put in a huge bottoming tail. You had a retrace, consolidation, and now you're breaking out. And on top of that, you had a weekly close above here. Now you're getting another weekly close above, which is really nice to see. A bit of a pause week today. A bit of a pause week this week, and a little bit of a down day as well. But overall, nothing detrimental for nat gas. I think it's just putting some good consolidation. I think you're getting ready for your final leg up to $4 to $4 to $5, depending on how high it wants to go. And that's probably when I'm going to take profits. When that does happen, I will be taking my profits on that gas around this area, And when it gets there, it's going to come back down. And I can definitely see myself buying back into nat gas and reloading, because I do see, geopolitical tensions in the world getting worse for nat gas. Worse, which means would be bullish for nat gas and oil. And as you guys can probably tell, oil surged today 5%. And you can see that oil surged and the dollar surged the gold surged as well, because right now fear is starting to set into the market. And something that happened today regarding fear is that the volatility index actually spiked up. Well, it spiked up as high as 20% today in one single day. So you saw the VIX spike 15% here. And then you saw the SPY was only down basically, 0.5%. 50 basis point is the only, that small amount that the SPY was down. So you can see that something is not acting right in this market at the moment. Someone is holding up the market, either with big option plays or something like that, and it is causing the S&P to be held up at the moment. So right, the Qs gave in a little bit today, and so did the IWM. And the Dow Jones is just 30 stocks price cap weighted, so that's why I didn't expect too much for the Dow Jones. But overall, the VIX was up significantly, and I do believe eventually the VIX, you're going to come to this $26 level, and that's still like a 30-40% move in the VIX, and that's going to cause the VXX, the VIXC, the UVIX, and the UVIX to spike up significantly. When you do get that move, you really don't want to be on the wrong side of things. You don't want to be massively long equities, in my opinion. I'm seeing a lot of people posting on Twitter, I'm long 130% of my portfolio. I'm long, buy. This is the bottom. This is it. I think you got to be a little bit more risk off here if you're long, and I wouldn't be buying up here. If anything, I would have chanced the long at the lows, but I didn't even want to get too exposed to this market at the moment. I'd be far more comfortable holding short positions or cash or puts or something like that. If you are going to long, do it with a small portion of your portfolio, and you can even do it with call options, so you don't even have to risk that much either. Anyways, I can move on here. I can take a look at silver as well. So silver is similar to gold, had a huge spike up. And then the funny thing is that gold was up, silver was up, and the dollar was up, right? So the dollar and gold can go up on the same day as well if there's fear and panic in the market. Because people, what are people gonna do when they sell out of their equities, right? What are they going to buy? Well, they're going to buy dollars and they're going to buy gold, because gold is a safe haven asset. It's your safety net. And right now, gold surged up and broke past this trend line. I did a short position today. My stop out, I believe, is just above like 1935. So again, if we gap up on Monday, that's fine. I'll take a stop out on gold because I'm heavily long gold positions right now. So I'm not really worried about anything in my portfolio in terms of long-term positions. But overall, I think there are some other forces at play holding up the S&P at the moment, and I think you should just sit on the sidelines and watch what happens in the coming week. We do have some pretty big news, I believe, coming up next week. Let me just check the Forex calendar very quickly. But yeah, overall, you guys can go on Twitter, follow Amor. He's very useful. He does put in sometimes. He gets a little aggressive on his tweets, but it's fine. It's just like, so I'll give you guys an example of something like this one right here. It's oh, sorry, I'm getting a phone call. Let me just mute that real quick. It's all fake. If banks reported market prices of their assets, they would all be bankrupt already. The result is all fake. They don't account bonds at half prices, but all good. Next week, regional banks reporting will be wild. All the rest, good luck to all. And that is something that is true as well. It's all fake. Essentially, the banks don't have to report their treasury bonds mark to market. They can mark them to face value, which means if they have a $500 million loss on a single bond that they bought from the Fed, they don't have to report it as on their books as a $500 million unrealized loss. They could just leave it at $1 billion, right, to what they purchased it at, right? So they don't have to report any losses. They could just leave it as so, and until they actually realize the loss, which can very well happen if there's a run on the banks, right? So again, holding your money in regional banks is probably a high risk thing to do. Anyways, we'll move on here. I think I'll wrap it up by maybe taking a look at Nat Gas and the DXY on the market cipher. We'll do some larger time frames. So right now the DXY, I covered this many times before. It's looking very bullish for the dollar. Although the dollar, long term will eventually go down because of money printing, it is regardless looking very bullish at the moment. And again, if the dollar goes up, this is bearish for equities. This is very bearish for equities if the dollar goes up. As you guys can probably tell, yesterday the dollar went up significantly, and it was quite bad for the S&P 500. And then right now on the weekly time frame, we are getting a bit of a slowdown here in the momentum. We have a 12 and a 2. We could be printing a red dot next week on the DXY if we get some more downside. Although right now the DXY hasn't validated the breakdown as far as I can tell. And we can even, drag it up even a little more if you want. But still, it did close above twice. And it could still go higher. Believe it or not, the dollar can go up to maybe 110, 111. And again, you can imagine what this could do to equities. And especially the market that's thinking that it's all good, it's all over. The downside is almost done. We're getting ready to go to new all-time highs. It is still possible that we go there, but I see it more unlikely now as as we progress into the later half of the year. And then finally, we'll take a look at the daily. And again, this is where I say that this is probably why we can go higher in the dollar. When we take a look at the dollar, we have such strong green money flow, and we have a green dot right here that just appeared on this daily candle that we just printed. So I still believe that the dollar can go significantly higher. If we do take out this 107.3 pivot, then that's going to be your confirmation that the dollar is breaking out to new highs. Until then, you can treat it maybe as a B wave, something like this, and we could go down a little bit more. But if it does go up higher, it invalidates this as a wave 5, and you're going to get a 5th wave extension that could even take you higher. Okay, and then finally, I'll take a look at Nat Gas, which again is probably the most one of our biggest positions at the moment. So on the monthly time frame, still looking very promising on Nat Gas. We'll take a look at the futures instead, because that's where the trades are based off of. So the futures looking still very bullish. A weekly time frame looking quite bullish as well. You actually almost cutting back into green money flow here, although it's a little bit extended on the weekly right now, but we'll see how we open next week. And then taking a look at the daily time frame, you got green money flow, but you're a little bit overextended. So I think you're gonna put in a little bit of consolidation, maybe a little bit of a wave 4 here, coming back down to $3 before we bounce back up to some higher levels at $4 or $5, which could take us even higher. Okay, I think that's about it for now. I don't really have much to add. We can cover Bitcoin very quickly, very briefly. Bitcoin at the moment on the daily time frame, it's still holding up, although I still believe Bitcoin's going to go down and it's going to take out the $25,000 pivot, and we're going to go down to 21K. This could fall in line with the markets going significantly lower. That would drag Bitcoin down. And looking at the weekly, the weekly we were looking extremely bullish. And now we're looking a lot less bullish, right? We had the futures close here. Let me just find the futures. There we go. The futures closed on the daily time frame. And yeah, there you go. You had a 14 and a -4. A little bit less bearish, but still, nevertheless, I think you're just getting a bit of a pause day before you go lower. If you take out this pivot high, then you can go to 30K. But what you're doing then is you're just extending the B wave a little bit higher. Something like this, right? You're just going to extend it a little bit higher, and then you'll eventually play out the same. But overall, we'll keep a close eye on it at the moment. All right, I think that wraps it up for this week's recap. Hopefully you guys enjoyed it, and I'll catch you guys on Sunday night.